So last week on Friday, the jobs report came out and the results were worse than expected. So this means that the Federal Reserve will cut interest rates on September 18th. So here's the official jobs report. So this is coming from the U.S. Bureau of Labor Statistics, the BLS, released Friday, September 6th. It says that the U.S. economy added a net 142,000 jobs in August, and that the unemployment rate has fallen from 4.3% to 4.2%. So the most jobs added came from leisure and hospitality, followed by healthcare and social assistance, then construction, then the government, and there were bigger losses in manufacturing. Okay, so these results, overall, just generally speaking, was this good news, bad news? Was this a good report or bad report, right? So let me give you some context. So I think that these charts will give you a better understanding of the situation. So here are the number of jobs added each month going back to 2022. As you can see, it is trending down. The labor market is weakening, and it's been weakening for a while. Now, here's the unemployment rate. So this goes back to 2021. So we're currently at 4.2%. That might not sound so bad. However, it's been going up, and it's been rising faster than the Federal Reserve has forecasted. So earlier in the year, they thought that the unemployment rate would reach 4.0% by the end of the year, but we're already at 4.2%. And this shows how much wages have been growing by. So wage growth year over year is up by 3.8%. So even though the rate of inflation has been falling, wage growth has been falling too, which is obviously not good. So now that you have the context, please let me know what you think. I'm going to show you what the media is saying, how they're reacting to this, and then I'm going to give you my opinion. But I do want to tell you this first. This is very important. So these numbers for August, the August jobs reports, I'm just being honest here. We don't know how trustworthy that these numbers really are, because I can say with a high degree of confidence that these numbers are wrong. We just don't know by how much they're wrong by. So the reason why I'm saying that is because the BLS, the government, they admitted that over the past 12 months, they overstated job growth by 818,000 jobs. And in this report, guess what? It happened again. They said that they overstated job growth for the past 2 months by 86,000 jobs. So I would say that's a lot, considering that August, the jobs growth number was 142,000. Anyways, let me show you the reactions. So this one is coming from Bloomberg. The jobs report came up short. It came in below expectations. So experts were predicting further weakening in the labor market, but the deterioration was more than expected. So here's what happened. The analysts were expecting that job growth would come in at 165,000 in August, but it came in short at 142. So the 3-month jobs growth is now at its slowest pace since 2020. Okay, so what does this mean? This means that the Federal Reserve will cut interest rates at their next meeting. Let me show you the odds. This is according to the CME Fed Watch tool. As you can see, there's a 100% expectation that the Federal Reserve cuts interest rates. So there's a 70% chance that the Federal Reserve cuts interest rates by 0.25% on September 18th. There's a 30% chance that they cut by 0.5%. So just for fun, I want to show you their subsequent meeting in November. So the market expectation is that the Federal Reserve will cut interest rates again in November. And here's December. The market believes that the Federal Reserve will cut again at their meeting on December 18th. So we're currently at a Fed funds interest rate of 5.5%. The market is expecting that to drop down to 4.0% to 4.75%. But you know what? Let's just focus on the September meeting. So it's almost certain that they're going to cut interest rates at that meeting, right? Now it's just a question of, are they going to cut by 0.25% or 0.5%? But I want you to know this. Once they start cutting interest rates, that's known as a Fed pivot, that's just the start, because they're going to keep on cutting. But how are they going to do it, right? Because if they cut very rapidly and with bigger increments, then the risk is that inflation is going to reaccelerate very rapidly. But if they drag it out, if they cut interest rates slowly, then what's the risk going to be? Then they're going to risk further damage to labor markets and to the economy. Okay, so I want to show you what some of the Fed members are saying about this, and then I'll give you my opinion. The Fed president of New York, John Williams, said, with inflation on a path to 2%, it is now appropriate to reduce the target range for the federal funds rate. So that's pretty direct. The Federal Reserve is ready to cut. So I know that some people are still skeptical of the Federal Reserve pivoting, in September. They're saying it's too early. But I'm telling you, you better believe it, it's happening. Now, Fed Governor Christopher Waller said that the recent data requires action. Front-loading rate cuts may be appropriate. So Waller is referring to the data that shows that the labor market is weakening. And when he says front-loading, that means that they may start cutting interest rates more aggressively at the start. So not just for September, but I'm talking about the next few meetings. Now, I want to give you my opinion, and I just want to say from the start, the way that the media is treating this, I think it's ridiculous. I'm going to show you why. Okay, so first of all, yeah, the Federal Reserve has to start cutting interest rates because of their dual mandates, right? But the Federal Reserve and the media, they're acting like the labor markets has been degrading just recently, like just over the past few months. But I think it's pretty clear, I think a lot of people will agree, that the labor market has been deteriorating a long time ago, at least more than a year ago. That's when it started. So I want to show you this. So the JOLTS report came out, and job openings have fallen to their lowest level since January of 2021. And layoffs are rising to their highest level since 2023. So just take a look at this. This shows job openings at the top. They've been falling. Look at the layoffs at the bottom. They've been rising. And listen, if you've been searching for a job recently, like if you've been actively looking, I'm sure that you already know the situation with ghost jobs, which are fake job postings. So I made a video about that. I dedicated an entire video about that, why that's happening, what's causing that. If you factor that in to this situation, then I would say that the situation is even worse than what they're saying right now. So I'm sure that if you've been looking for a job, then you could tell other people, let other people know in the comments. And I want to tell you this. Okay, so the labor market is weakened. Well, it's been weakening, but the situation can get worse. I want to show you this. So this chart goes back more than 20 years. It shows how many unemployed people there are right now compared to job openings. So it's bad right now, yes, but we've seen worse. Look at how bad it got in 2009, 2010. Obviously, it was through the roof during the pandemic, but look at where we are right now. There's still a lot of room for the labor market to degrade. Even if it gets to the 2003, 2004 levels, there's still a lot of downside in the labor markets. So listen, all I'm saying is that the labor market from this point on can get worse. The reason I'm saying that is because if they cut interest rates in September, it's not like that's gonna improve the labor market and job situation immediately. I highly doubt that. I personally believe that the labor market is gonna suffer and get worse before it gets better. Okay, regarding the interest rate cuts at this upcoming meeting, I've been saying this for a while. I believe that the Federal Reserve will cut interest rates. I do believe that's going to be a cut of 0.25%, but you have to remember that this is just a start because they're going to continue cutting interest rates at subsequent meetings. If you want to know what that means, like the consequences of interest rate cuts, like on the stock markets, I made a video about that. If you want to know what that means for the housing markets, for mortgage interest rates, for home prices, I made a video about that too. Please subscribe. I thank you for the support, and I wish you a very nice day. Take care.